bring in Krishna Guha, Vice Chairman at Evercore ISI. There were certain things about the commentary that you thought was on the mark, Krishna, but there was a lot of things you think missed the mark as well. Will you go into some of each, please?
For sure. So I thought Chair Powell was very strong on credit policy yesterday. He gave a very forceful defense of why this was in the national interest, and he made it clear that the Fed was willing to do more if it needed, to expand its programs or to create new programs. Very important, very well executed. Where I thought it was a little weaker was on forward commitments in terms of monetary policy, making it clear that the Fed's going to go all in across forward guidance on interest rates and a future new QE program in order to underwrite the strongest possible recovery. Now, this was a sort of transition meeting. In all fairness, bandwidth constraints and other reasons, I think, probably prevented them from getting to that set of issues at this meeting. But it is a little disturbing when the central bank talks about how the virus presents considerable risks to the medium-term outlook, but then doesn't detail what it's going to do to oppose those risks.
The pivot back to normal monetary policy that you say was clear in what the chairman was saying. What do you mean by that, and why was it clear that that's something that's going to be happening as soon as I guess they can do it?
Right. So I think what I have in mind here is that the Fed leadership and the Fed staff have been completely consumed in recent weeks by this titanic struggle to unfreeze the credit markets, to get even the Treasury market functioning properly again. And I think in that context, with rates already at zero and a ton of market functioning QE taking place just to fix market function issues, understandably, reasonably, the core monetary policy questions just got sort of pushed to one side for the time being. And you see this really in particular in their rather weak form of forward guidance, which says that they'll keep rates at zero until they're confident the economy's weathered the recent events and is on track to achieve their goals. They could come up with much more forceful guidance. It's also, I think, going to be necessary that when this market functioning QE wraps up, they transition to a regular, forceful monthly QE program. So what Powell had to say on this yesterday was interesting. He said the Fed believes that its current stance, its current guidance is appropriate, quote, for now, but that they have started talking about what monetary policy might look like and the kind of changes that may or may not be appropriate in the months ahead. So I think of that as a recognition that the next phase of Fed policy will involve turning back to some of these core monetary questions, as I said, enhanced forward guidance, a regular QE program, and whether they will or won't add some yield caps into the mix.